18% equity than it would be to buy at 550 and gain 18% equity? It's the same. You're just jumping on at a different point and jumping off at a different point. Values are going up. Values are not going up sort of sporadically and suddenly here in Massachusetts. They've been going up since really late 2009. And I'm on record with this. Look back through my video blogs, you'll see. Really, we bottomed out somewhere between 2008 and 2009 and started crawling back up in a lot of areas pretty steadily. And we're still going. So it's a good time to buy, even if you're buying a little higher on the ladder, because you're going to jump off yet higher on the ladder. Now, something else a lot of people are still looking for, a lot of investors are out there frustrated that they're not getting the deals they were getting in past years. Investment strategy has to also be recalibrated. Rents have gone up. So if you're paying a higher premium for rental property, you're also getting more rent back. You're also going to gain more equity on that property over time. So yes, there's a little sticker shock to the sticker values going up. But at the same time, you're buying into property that's going up, and the return is going up. So what you really need to do is crunch the numbers with yours truly, and we'll look at what you're actually going to be getting, what your return on investment is, what the market's doing around that area, and whether or not you're going to be gaining any equity, and decide from that whether or not it's a good idea to buy, not from you saw something there 2 years ago for $4.40 and now it would sell for $5.25 and that pisses you off. Because that's just not reasonable investment. You have to look at what the market's doing and evaluate all the components, whether or not it's a good investment for you. Something we're seeing with it foreclosed property this year, which is really interesting, is they're even listing pretty high on the market. Why? Because a lot of mid-level to high-level flips are selling. We're seeing more buyers come into the market with equity, buyers who sold a home and have equity in it to buy a larger home for the family, to really put roots down for their family home, or sellers who have a family home and are downsizing. And in both those cases, we're seeing people who like a house that's been done over, that's turnkey, that they can walk into, and they're willing to pay a little bit more of a premium for it because they have equity that they're taking out of their other property to put in. They just did well on a sale, so they're not as blown away by the sticker shock of paying a little more for something that's been done over. So again, it can still be a good investment to buy a foreclosed property that's a little higher on the market if you've got potential buyers willing to pay more for it once you flip it. These are just a few things that we're going to look at this year. I'll start doing these more regularly now that I'm a little off the road here in January, although the deals are already starting to fly. But you can always find me at danbernal.com. You can find me on beangroup.com. You can find me at dan.bernal@beangroup.com, or you can see me on the road where I usually am. Thanks.